Good afternoon. Thanks for joining us this afternoon. I'm really pleased to be here to be able to talk to you about Armour Energy and our exciting opportunities, particularly our North Australian project, which we're seeking farm-out partners to help us take our exploration project, shale gas project, forward as quickly as possible. We've also got other projects that I'll touch on briefly during the presentation. So, usual disclaimer, brief snapshot of our corporate structure. We've got about 500 million shares on the ASX. Our market cap sits around 45 million at current share price. We've got a bit over $11 million in the bank. We're gearing up to spend that money on our drilling program coming up later this year. Our original company owner, DGR Global, retains about 22% of the business in terms of shares. The rest of it's predominantly mums and dads and some of the smaller Australian institutions. Management team's got significant experience in oil and gas, and our board has significant experience in developing resource projects, taking them from very small cap to, for example, Armour Energy. By two of our directors went from a $20 million company to a $3.5 billion company sold to Shell some time ago. Our projects overall, we started as a pure exploration play with projects on the McArthur Basin and Isa Super Basin in North Australia, in far north Queensland and the Northern Territory. Recently we acquired the Kincora project from Origin Energy. That's a production facility that was mothballed for some time by Origin, but we've brought that back online and we're in production now. And we're planning to double our production from around 9-10 TJs a day currently to 20 TJs a day, hopefully this year. And we also have some interest in Victoria, which is currently in moratorium on onshore production, but hopefully with a change of government that'll change. And in Uganda we have a oil exploration play which is quite exciting. Our original parent, DGR Global, has a major beneficial interest in that, is carrying Armour for the exploration period, which is currently ongoing. So our Northern Australian project area, we've got 100% of the exploration licences we have there. Massive area, 30 million contiguous acres, probably about the size of England. We've invested roughly $67 million in that project from 2012, 13 and 14. Northern Territory decided to go into moratorium with regard to fracking. So we've parked that project and got onto our Kincora project, which now gives us a revenue stream. Now that the moratorium in the Territory's lifted, we're moving back into the Territory and we're getting some interest not just in our Queensland acreage but our Territory acreage. We could go slowly going ahead on this acreage and use the revenues from our Kincora project to develop this, but we see a massive opportunity here, and accelerating the opportunity we see as a better benefit to shareholders. Hence we're seeking farming partners to join us and help us take forward that program. In Queensland, I'll move on to the next slide. In Queensland we drilled and this is Northern Territory, I'll stick with that for a second. Our glide well in the Northern Territory is a conventional play, only 600 metres deep. We flowed 3.3 million scuffs a day for 3 days before we shut that in. That was just a poor boy test. We've got a stack of opportunities across our acreage up there, conventional and unconventional. The unconventional is the shale play, and of the six wells we drilled in the Territory, we intersected hydrocarbons on 5. We flowed hydrocarbons from this Glide 1 well, and we know that there's a significant hydrocarbon province, multiple basins across our acreage, and just to the west of us we've got majors in Australia in Origin Energy and Santos have moved into the Beetaloo, which is a basin just to the west of our McArthur Basin, and they're drilling and looking to invest up to $100 million this calendar year each. In Queensland, we drilled a couple of wells. We kicked off one vertical well and did a horizontal lateral in our Egelabria 2 well. We were the first Australian to flow gas from a horizontal fracked shale well. We did that in 2013, and we flowed gas from that well. So from the flows, we had a 3C contingent resource confirmed by third-party certifiers. That Egelabria 2 well was drilled on structure. We drilled Egelabria 4 off structure and up dip from that, and we had good gas shows in that well also, which from those two wells gives us demonstration of a significant fairway of gas across the Lorne and the Riversley targets, which run from east to west across our tenement 1087. That's an example of what we did on the lateral well and the frack, and that's a picture of the one of the flares during the drilling operation. Scott touched on this. The East Coast market in Australia is one that is going to see significant shortfall against demand, production shortfall against demand in the not too distant future. So we, being an exploration and production company with a lot of exploration upside, see ourselves very well positioned to take advantage of this upcoming shortfall. The 2P, the red shaded area you see there, are proven and developed reserves, and they're barely satisfying the demand at the moment. In about 4 or 5 years' time, the undeveloped 2P will not meet demand as well. So you can see as you move forward, the prospective and contingent resources are even falling away from the projected demand. So the opportunity to develop your exploration acreage and satisfy this demand curve is sitting there nicely for us at the moment. We think it's a great opportunity to get in, do exploration, do some appraisal, get into production over the next 5 years as this demand is going to increase and existing production is facing a shortfall. In relation to that, having a good gas price is also very helpful for us. Scott also mentioned this. AEMO, the Australian energy market operator, is forecasting that a slow change scenario, and that's slow change with respect to Australia's economy in terms of immigration, interest rates, CPIs, all that sort of stuff just staying at base level. You're looking at a low price of gas on the east coast of Australia of $8 a gigajoule. Any increase in terms of change to the economy, you're looking at a neutral scenario and a fast change scenario, pretty much in parallel for the next 10 years or so, and then a bit of separation. Looking after that, I guess, as the potential renewables kick in and get some traction, but there will always be opportunity for gas because the wind doesn't blow all the time and the sun doesn't shine all the time, and gas is going to be the backfill to the gaps that are created there. So we're in a strong demand market, we're in a strong price market for gas on the East Coast. So our North Australian acreage in the Northern Territory and North Queensland is readily connected to the market. It's connected to the Darwin market. There's opportunity for expansion to LNG trains in Darwin. There's a pipeline to a major mine in our region which produces, I think it's a 50 megawatt power station, so there's opportunity to get gas to that. There's a pipeline that cuts across the bottom of our yet to be granted tenure, but we're working on getting that granted through native title. And then the connection to the East Coast market through existing pipelines and eventually potentially to the LNG markets in Gladstone exists. Once you're connected into that market, you're connected to the whole East Coast. Our Northern Queensland market can be connected by gas or by power generation down to the Mount Isa market, and opening up this gas province in Northern Australia will open up a whole heap of regional mining opportunities that are basically looking for energy at the right price. In their backyard, producing gas, producing energy is going to enable the market to grow significantly. The existing market in that region is over 100 PJs per annum already, and the opportunity to get into that exists. This just indicates the connection to the broader East Coast market through the existing pipeline infrastructure. Armour Energy exploration opportunity in the north, and our production facility at Kincora in southwest Queensland there. So our proposed farm-in for the Northern Australian acreage, we're looking for a partner to come in. We don't mind whether we operate, they operate, or there's a transition between the two. There's a lot of seismic work to be done. There's drilling to be done. We see a 5-year program. We've got a lot of data that we've gathered over the last few years that we've been working up there, and we're very excited about the opportunity and love to talk to potential investors about it. So the highlights for us, the farming up north, up to a 60% across our 33 million acres. It's highly prospective. We've done a lot of work already. Conventional and unconventional stacked play opportunities. Strong domestic market on the east coast. Good infrastructure nearby to our exploration acreage. It's in broad open country, so low social impact, and we have already built strong relations with communities. And both the Queensland and the NT government are very supportive of development in these locations. So thanks for your time, and look forward to talking to anybody. We have a desk outside. We're here today and tomorrow. Thank you very much.